Hey everyone, I was up late last night messing with Microsoft Excel doing Bitcoin analysis because I love Bitcoin and I love Microsoft Excel and it's really fun to put the two together. So I pulled all the price data off investing.com and I wanted to do some analysis of what the drawdowns in Bitcoin's price had been since down here on line 9, since the lowest price Bitcoin was in 2022, which was 15,504 and 20 cents recorded on November 21, 2022. Okay, so I'm going to walk through these and then I'm going to walk through some analysis that I did on this. Okay, so the first drawdown was it went from 15,500 up to 25,000 before, and this is basically before a more than 20% price correction. So all of these drawdowns are 20% or greater. Obviously, there were smaller price pullbacks of less than 20%, but this only counts something that was 20% or higher. So before there was a 20% price correction, it went up to 25 before dropping to 19.5. That was essentially there was a big sort of recession scare. And in this time frame, three banks, Silicon Valley Bank, Silvergate, and whatever the third one was, blew up. And that was actually marked the bottom because as soon as those banks blew up, the price actually started rising because people were actually moving into Bitcoin out of the traditional financial system. But this price drop here of 22% was mostly driven by just everybody was worried that a recession was right around the corner. People were freaking out, panic in the streets, all that sort of stuff. All right, so that 22% drop was followed by a 62% gain up to 31,765. So the gain was about three times as large as the drop. The drop was 22%, but then the subsequent gain after that 22% was 62%. So it was 2.8 times as large. Okay, so then it went up to 31,765 and dropped to 24,923, another 22% drop. But the gain after that was 96%, almost a 4.5% gain, or sorry, 4.5 times as big of gain as the drop. So you can see this ratchet here. The point I'm ultimately going to make is that the gains are about quadruple the drops. So you drop 20%, you gain 80%. You drop 25%, you gain 100%. You drop 30%, you gain 120%. You drop 33%, you gain, 133%. That's basically what's going on here. So that gain was just under 4.5 times as large as the drop. Okay, then it ran up to 48,000. This was when actually this drop, just for context, this was when the Bitcoin ETFs. The rumor was that they were going to be approved, and the drop was a result of everybody worrying that they were not going to get approved or that it was going to take longer. Okay, then it went up to this price after the ETFs were approved. Literally the day after they were approved, they started trading. The price peaked the day they started trading just under 49,000 and then dropped to 38,500 over the course of the next couple of weeks as a result of people. This is all of this is a story of people getting ahead of themselves, thinking that euphoria is right around the corner. They're about to get rich quick, people loading up on leverage, then it becoming clear that it's going to take slightly longer than they anticipated, and then you get a price drop. So that 21% price drop was followed by a 91% price gain. Again, the gain exceeded the drop by a factor of 4.3. Then we got the run up after the ETFs really kicked in, up just under 74,000, which subsequently dropped to on August 5th. That was a pretty big panic about, actually, that was the yen carry trade blew up. I'm not going to go into what the yen carry trade was, but a bunch of people were borrowing money really cheap in Japan to invest in the US. And then the Japanese central bank raised interest rates and it blew that thing up. And people were freaking out that there was a recession right around the corner and all that sort of stuff. And it dropped to 49. So that 33% drop was followed by a 121% gain. So the gain exceeded the drop by 3.7x. And that's when we ran up to 109,000, which was followed then by a 30% drop as people got all euphoric that, the Bitcoin strategic reserve was right around the corner. Maybe the US would buy $1 trillion of Bitcoin or some ridiculously large number, which was never going to happen the next day. And then when people realized, like all of these other times, whatever it is going to take longer than we thought. It's just going to take a little more time. So then the price drops. People are freaking out. There's blood in the streets, recession fears, all that sort of stuff. which led to the price drop earlier this week, down to 76.6, a 30% price drop. And that gain is calculated on a hidden sell, but that gain is if we have a 3.8% recovery, and I'll talk about that. So if we get it, if history repeats itself, I'm going to uncover this sell. If history repeats itself, so the average gain here, if I hide the decimal, is 4x. It's really interesting how consistent it is. Again, that first one was 3x, but if you hide the decimal and so it rounds to the nearest whole number, 4x, 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 4x. So it doesn't matter if you're dropping 20%, you get 4x benefit. You know, the reward for a 20% drop is 4x ups, is 4 times that much percent gain. 4 times that much gain, 4 times that much gain, 4 times that much gain. So if we get this one, which this is a hypothetical, if we get a 4x gain, then that would get us to a price of 163,000 before the next price correction of greater than 20%. Now, is that going to happen? I don't know. You don't know. Nobody knows. We could end up with a massive worldwide recession and we get a big drawdown in the price of Bitcoin. Nobody knows. But if we get exactly the average here is 3.8. So if we get that 30% price drop we experienced earlier this week, if that is followed by a 3.8x, which is the average of all of these, the average of all of those is 3.8, which is why it shows as 3.8. That's the average. If we get that, it would be a 30% price drop followed by 113% price gain. Again, that number there, I should mark it with a different color. These numbers are all hypothetical. Well, that number is an average, so averages are not hypothetical. But if we got the exact same thing and it repeated, that would be a gain up to 163,000 before another correction that is larger than 20%. But I have no idea. You have no idea. And, you know, who knows? There's some variance in that what that number could be. For example, I will unhide these cells. For example, if there's only a 2.8x upside before a 20% correction, we'd get to 140 before the next 20% or more correction. If we get all the way up to 4.5x, we get up to 178,000 before the next correction that is larger than 20%. Or if it mirrors this here at a 4.3x, we get to 175. If it mirrors 3.7x, we get to 160. But again, the average of all of those is 163,000. So if history repeats and we don't hit a major every 4-year correction, this would indicate that if this pattern continues, we would get to in the ballpark of 163,000, maybe somewhere between 140,000 and 179,000. Let's round to 180. Somewhere between 140 to 180, this thing would predict we get to between 140 and 180 before the next price correction that is greater than 20%. But I don't know. We could hit the next sort of the big one. All right, so let's talk about what the big one looks like. So again, the bottom line here, the main thing I want you to take away from this is that pain equals gain. You cannot have a high upside, low volatility asset. If you have high volatility, you have the potential for high upside. If you have low volatility, you do not have the potential for high upside. Low volatility assets do not have huge upsides. Things have huge upsides because they're in the early stages of growth, or in the case of Bitcoin, monetization and adoption. And that is why you get the huge upside, is because you have that volatility. It's because you are early. Early things are volatile. Volatile things tend to be early in their life cycle. Again, the reverse can be true. You can get volatility late in an asset's life cycle, but we know we're not late because only 4% of the world's population even owns Bitcoin. Anyway, so let me give a historical perspective. I'm going to delete some of these cells so I can put them on the same page. So here is, in fact, I'm going to also move this down here so it's easier to see all of this together in case you want to see them all on the same page. Okay, so this is a historical perspective of the largest drawdowns in Bitcoin's history. Now, these drawdowns were much larger than between 21% and 33%. The lowest and the highest that were above 20 were 21, and the highest was 33. So the recent price pullback earlier this week wasn't even the largest price pullback. The price pullback from just under 74 to just under 50 was actually larger. It was a 33% price pullback instead of just 30%. Okay, so here's the history of Bitcoin. The first huge rally went to $32 and then down to $2. A 94% correction, meaning Bitcoin was down to only 6% of its prior value. But that was followed, again, if you could stomach that insanity, it was followed by a 62,000% rally. So again, I mean, talk about gut wrenching. You lose 94% of your value, but if you held on, that $2 Bitcoin turns into $1,200 Bitcoin. So you make, 620 times your money. 620 times your money. That's insane. So the gain was a multiple of 661 as compared to the loss. The loss was 64% down, but the gain was 61, it's almost 62,000% up. Okay, then Bitcoin became less volatile. The price got bigger, there was more adoption. The next big price correction was in 2013. Price dropped from 1,200 down to 92. That was a 93% price correction, so there's still 7% of its value. That was followed by a 21,000% rally. Again, so the rally, the upside of the percent up exceeded the downside of the percent down by a factor of 233. Again, these numbers are getting smaller because Bitcoin is becoming less volatile. The numbers are bigger. It is not so gut wrenching. Okay, the next big price correction, 2017, went from 19,000, just under 20,000, down to roughly 3,200. Again, that was 84%. So rather than only 6% of Bitcoin's price being left with a drop of 94%, now there's 16% of Bitcoin's price still there. That was followed by a 2,000% rally. So in that case, again, it was the upside was 25 times as large as the downside. 84% down, followed by 2,000% up. Now, here is the magic number that we don't know. What we don't know is, what we do know is that the price back in 2020, between 2021 and 2022, dropped from 69,000 down to 15,500. This number right there. That was a 78% drop, leaving 22% of the value before it rebounded. So what the history would predict is that there is a massive rally following that, probably less than 20x in this price cycle. Obviously, long term, I think it's much higher than that, but probably something that's radically higher, but as a multiple, something that's probably lower than this rally. So I could play around with some of these things. Let me do that. I'll do that live here. I did not plan to do this, but so if this is, that's going to say negative 100. So let's do a goal seek here. Data, what if, goal seek. All right, so we are going to set sell this one to 2072% by changing sell this one. Okay, so if this mirrored, there you go. If this mirrored the previous, we would get a high of 336,000 before a major price correction, and that would be 27x. Now, I think that's unrealistic before we get a price correction that's, relatively significant. I've been predicting, for example, we go up to 280,000 and then we drop to 140 very temporarily in 2026, and then it keeps going. Or that we go to, something smaller, 180 and drop to 140. I don't know, maybe we go to 220 and drop to very temporarily to 120. I think all those numbers are higher than here. And when those drops happen, it bottoms and then it bounces right back. So let's say, since this has been, decreasing, let's put a number in here. Let's do a goal seek of, let's set that number to, let's say 1,500% by changing that number. This would indicate, sometimes, whoops, did it wrong. We need to do that number to 1,500%, not 1,500x by changing that number. Okay, that would indicate we run up to roughly 250,000 before the next major price correction. Now let's say this drops in half. Let's do a goal seek and say that number goes to 1,000% before a major price correction. That would say we would run up to $170,000 before we get a next major price correction. Now, How big is the next major price correction? Each major one has gone down the percentage: 94%, 93%, 84%, 78%. Now, all of this happened. That 78 only got that low because everything blew up at the same time. So there were recession fears in the macro economy. Plus, you had the what do you call it? Grayscale Bitcoin Trust that went from a premium to a discount. So that blew up Three Arrows Capital. A ton of stuff blew up on BlockFi, Celsius, Voyager. Ultimately, the whole Terra Luna ecosystem blew up, and culminated by FTX. Ultimately, FTX blew up. So that drawdown of 78% was pretty brutal, and I think significantly higher than it would have been, given the fact that that was the culmination of all the dominoes falling of every stupid thing every human had ever done, culminating ultimately in the stupidest of stupid when FTX blew up, ultimately resulting in a 78% drawdown. So I think had that not all been the case, it would not have been nearly as brutal. Now, in this case, I think what the drawdown we get after, let's say it runs up to, any of these numbers we've looked at, it runs up to 170, 248, all the way to 336. I think the biggest drawdown we get in the next big drawdown is more like 50%. Could be higher than that, could be 60%. Certainly, I think less than 78%, but it all depends on how high we go before the correction. So if we go something insanely stratospheric, then yeah, you're going to get a bigger price pullback, because stratospheric by definition is unsustainable. And so you get a bigger price pullback. So the higher you go, the bigger the price correction in, let's call it 2026. But we have the ETFs now. We have the Strategic Bitcoin Reserve. We have the Sovereign Wealth Fund that could acquire Bitcoin or Bitcoin-related assets. We've got states that have strategic Bitcoin reserves being set up. There is a ton of concrete floor built under the price of Bitcoin that was not there back in 2022. Back in 2022, there were no ETFs, there was no strategic Bitcoin reserves, there was just none of that. So I think we will see significant dampening of how big the big drawdown is, even in the biggest of big drawdowns. Even if there's a major price correction in 2026, I think that price correction is some number significantly less than 78%. The number that feels right to me is probably 50%. But again, that means if you get that 336,000, it drops to half that before it bounces off and sets a new all-time high subsequently. Or we get to 248,000, it drops to 124,000, which would be half of that. It drops to 124,000 before bouncing off that number. And again, that's like the lowest of the low before it comes back up. Or 170,000 would drop to a number that actually on a 50% drop was below 100. But if the biggest price, increase this cycle is 170, I just don't think we're going to have a huge price correction off that, because that's just not that huge of an uplift as compared to where we are. But anyway, that's the quick analysis. Nobody knows. I don't know. You don't know. Nobody knows. If you want the spreadsheet, I've got the entire price data of Bitcoin going back to the beginning of time, complete with detailed analysis, a bunch of random analysis, a bunch of charts, including daily price, logarithmic daily price, weekly price, monthly price. You can see each of these smooths out. Monthly price, quarterly price, each one gets smoother. Yearly price starts to smooth out a lot. 2 year, this is the average rolling. So average rolling weekly, average rolling monthly, average, the average price of the previous quarter, the average price over the previous year, the average price over the previous 2 years. 3 years starts to smooth out almost entirely, and 4 years is just beautiful straight up. So I've got all these all the way out to 5-year chart, 6-year chart, 7-year chart, 8-year chart, and then some other analysis of what percent of the time Bitcoin is in the black, meaning going only up. Anyway, I've got all that data. It's all on a spreadsheet if you want to see it, but I thought I would share this just to get a sense of what might be coming here. And the big point of all of this is, however big the pain, that is the subsequent gain. So if you don't think if you want to fight, let's call it this 4% that we just looked at. What everybody wants to say is, why does Bitcoin not have, why does it only, wouldn't it be great if it only dropped 5%? It's like, yeah, but that means it's only going to go up after it drops 5% by 20%, 4x. Again, this is not like a hard and fast rule. This has just been surprisingly consistent since 2022. Is that sort of the pain is rewarded by the gain? Bigger pain, bigger gain. Would you rather have a 21% price correction, or followed by a 91% recovery, or a 33% correction followed by 121% recovery? Or back in the early days, a 94% correction followed by a 62,000% recovery. So the pain equals the gain. You can't get the upside without the volatility. The more painful the volatility, often, again, it's not an absolute predictor, but the greater the pain, the greater the upside. And so, in my opinion, you want volatility. Volatility is vitality. The greater the volatility, the greater potential upside, and the more it tells you you are early in the Bitcoin adoption life cycle. So hopefully all this helps. As always, I love sharing anything with you all, and have a great day, everyone. Thanks so much. Bye.